Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khimka.
And I'm Yatin Mota.
Well, Yatin, we managed to build on to yesterday's gain. So the Nifty cruising above that 21,900 mark. Even the Sensex has reclaimed that 72,000 mark. But the broader markets, the outperformance came in there with the Nifty mid and small cap indices gaining in excess of 1%. And PSUs. Looks like the party has started once again, Yatin.
Absolutely.
All of these stocks, oil and gas stocks like BPCL, ONGC and other PSUs like Coal India, they continue to move ahead, charge ahead, so to say. Most of the Nifty gainers today were from the PSU pack. We'll be talking about that in greater details. But, advanced decline ratio, Yatin, 2:1, good
Yes.
breadth. And as I mentioned, broader markets in fine fettle. Among the, gainers, PSU banking index continues to rage on for 3.5% kind of gains coming in there. Oil and gas pack as well, in excess of 2% gains. Autos, powered by M&M, that stock hit a fresh 52-week high today. We'll be talking about that as well. And FMCG and pharma, these two pockets, weren't doing all that well among the top sectoral laggards today. And, on the Nifty, M&M, as I mentioned, 7% up move there, Yatin. Aside of that, BPCL, ONGC, NTPC, Power Grid, all these PSU names, NTPC and HDFC Bank, Yatin, on a day when other private banks haven't done all that well. We saw HDFC Bank gaining 2% or thereabouts. On the losing end, Axis Bank, ITC, Apollo Hospital, HUL, Nestle Britannia, all these FMCG names and some of the private banking names like Axis and ICICI Bank. But Yatin, as I mentioned, oil and gas pack was active. MRPL gained 20% in today's session. What are the other movers from the broader markets?
A lot of movers. In fact, if you look at Oil India also, that stock gained nearly 13%. So the entire mid-cap oil and gas space was also buzzing, especially with PSUs like MRPL and Oil India gaining in high double digits. Now, apart from that, we had stocks like GPPL, Aegis Chemicals, Saregama, NLC India also doing well in trade. All of these stocks gained anywhere between 8 to 10%. Also, we had the likes of Kalyan Jewellers, MTAR Technologies, which corrected a lot recently, showing some bit of rebound again in trade. What was not doing well is the likes of Z. The stock was the top F&O loser, down nearly 6%. Paytm, another lower circuit of 5%. Vedanta, there was a big block deal of nearly 7 crore shares at around 265 to 266 rupees per share. And the stock settled down nearly 4% after that particular block deal. But in the F&O space, we also had stocks like Polygab, which moved nearly 5% in trade today. So the overall market breadth was quite strong with PSU stocks, especially in the oil and gas space, doing quite well.
Right. Before we talk about the stocks, I think there was a very crucial judgment in the electoral bonds, right, from Supreme Court, wherein they've struck down the electoral bond scheme that allows anonymous donations to political parties as unconstitutional. And, SBI, that was the only bank that was mandated to issue these bonds. They have been asked to stop and they will be, giving all the details about these bonds since 2019 to the Election Commission. But, we spoke to a couple of market participants as to understand whether or not will this have any kind of bearing on stock markets, given the fact that, we have elections coming up just about, in 3 months' time, right? But most of them said that, this won't really have any kind of impact. What will have an impact, of course, will be valuations as well as how the earnings trajectory really pans out. But I think on that note, let's start with your stock today. M&M, yesterday also we spoke about it, but there has been more clarity from management and brokerage upgrades as well. So tell us about why you have picked this.
As far as M&M is concerned, we have a very strong outlook for the SUV segment as well as the tractor segment for FY25. Now, two things are happening in FY25, which is number one, the ramp up of the SUV capacity starts from Q1 onwards, which is fag end of Q4, I beg your pardon. And also the tractor segment, which has been, marred by, patchy rainfall and El Nino. Last 2 years have been quite slow for the tractor business. And finally, the management now believes that the tractor business also should start showing some kind of a strong growth or a better growth versus the last 2 financial years. So in FY25 or the calendar year 25, we could see some improvement in tractor volumes as well. And probably the market liked the overall management commentary with respect to capital allocation, the kind of investments they are doing overall for the automotive business as well as the non-automotive business. So I think post the conference call, management spoke about the order book also, which will give visibility to the overall earnings for FY25, and hence the stock saw very strong momentum in trade today, almost ending the day higher by about 7%.
Right, I think Jeffries is one brokerage that is cautious on
No,
M&A.
Jeffries has a buy. All the brokerages have a buy.
Yeah.
CLSA, Nomura, Jeffries. In fact, Jeffries and Nomura have a target in excess of 2,000 rupees per
yeah,
share. Yeah.
yeah.
With Nomura having the highest targets among the known brokerages to about 2150, which
Yeah.
implies a 20% upside from the
Right.
current levels.
Right, of course, M&M powering ahead in trade today, but what lost some bit of sheen in trade was Vedanta, down 4%. Of course, Yatin has already mentioned there was a block deal in the counter, over 2% equity exchanged hands, and the block deal was worth 2,200 crore rupees. In fact, if reports are to go by, GQG partners may be the likely buyers. Now, promoters were looking to sell stake worth $1 billion, in a bid to pare debt, the massive debt burden that the company is facing. That has been an overhang. Of course, the company faces $6.5 billion worth of outstanding debt. In fact, $4.5 billion worth of debt payment is due by FY25 itself. So, according to reports, GQG has picked up this stake, but we'll have to see, once the details emerge. GQG, Yatin, we know that they have raised stake in Adani Group of stocks, in GMR Airports, and we've seen what those stocks have really done. So, perhaps we'll have to see how this capital infusion in Vedanta, whether or not it manages to change the fortunes of Vedanta as well or not, because, of course, GQG has been, dubbed as a white knight, right, for some of these companies.
But I don't think so whether GQG might have bought a stake in Vedanta. I don't think so. There was any disclosure also. Let's see for the
This is
Bulldil
a
data.
report-based.
Yeah, but I don't think so. GQG would have bought, Vedanta, because that is what sources had indicated that I don't think so. GQG would have bought in the shares of Vedanta, and given the fact that the stock ended almost at the day's low, a lot of shares would have slipped in the public also, because it happened in the open market, not in the block window. So probably let's see, the list of buyers probably will be interesting to watch out for.
Yeah, of course, that's something that we'll be watching out for. But aside of that, I was talking to Mr. Deven Choksi in the morning, and he said that there's obviously the demerger restructuring that's happening, right? So that could be some bit of overhang for the balance sheet, given the fact that some of the greenfield expansion or greenfield projects may get delayed or stalled, perhaps, who knows. So that could be an overhang. But all in all, he also mentioned that valuation wise, it looks pretty much decent, reasonable right now, and whoever new investor comes in will put in some money, and that could provide some relief to Vedanta in terms of the massive debt burden that they are staring at. So that was about Vedanta. But the other stock on my list, Yatin, is Muthoot Finance. This stock was up and about at earlier in the day, but there was a guidance in terms of loan growth that came in, and the company says that it expects 15% loan growth in FY24 vis-a-vis earlier indicated 15 to 20%. This they had indicated in Q3, but the lower end of the guidance, that is something that came in as a disappointment, given the fact that the numbers are pretty healthy. There was a strong momentum in gold loans as well, and it has various subsidiaries or various arms like home loan, microfinance, personal loan businesses. They've all seen good growth, but what was disappointing was the margin growth as well. Most of the brokerages have flagged off that cost of funds may also go up going forward, and NII was also a miss by 1%. If you look at what Morgan Stanley has to say about Muthoot, it has an underweight rating, target price of 1165, and they have pointed out the fact that margins could be an area of concern for some time, and even CLSA has an underperform rating, target price of 1440 rupees per share, and it has pointed out that even though MFI subsidiary has done well, it just contributes 10% of the consolidated AUM growth. And if you look at the stock price on a YTD basis, we've seen a 9% kind of downtick coming in on Muthoot Finance. We'll have to see how the margin trajectory really pans out going forward. Also, the downbeat kind of a guidance for loan growth came in as a disappointment. But earlier in the day, the stock was doing good, but after the guidance on loan growth, the stock came down.
I think the microfinance asset quality was, I think, one of the reasons which also did not augur well for the company, because their asset quality has deteriorated for the microfinance business. Obviously, good growth in the gold loan finance business and the housing finance business, but as you were mentioning, the downtoning of growth did not probably suit the market participants, and hence stock ended nearly 2.5% lower.
Well, then those were the stocks on our radar this afternoon. But with that, we've come to the end of this edition of Closing Bell. If you have any comments, leave them in the comment section below. And of course, stay tuned to Money Control for all your other news and updates.